Hi and welcome to Knowledgist. I hope all of your preparations are in right direction. So just a second, we'll start with credit management and importance of credit management. Before that, if you have not subscribed to us, kindly subscribe now. So in credit management, we are expecting at least at least 30 plus questions for scale 3. Am I clearly audible to all of you? Am I clearly audible to all of you? Yes, just a second. Let me check my audibility. Just a second. Yes, am I clearly audible to all of you? Yeah. So we are expecting at least 30 plus questions in scale 3 for credit management, from credit management for BoM generalist, and 25 plus questions in scale 2. And the level of scale 3 questions are going to be bit tough, moderate to tough. Whereas in scale 2, it will be they will stick to moderate level questions. And there will be in all toto there will be at least 10% to 20% questions which will be easy level, rest will be moderate, and 10 to 20% again will be at the top level questions. Okay, so that's why we have given you a separate credit management MCQ list. For newcomers, let me take you to the screen where you will find it, and today we'll discuss few credit management concepts, important concepts, charge creation, etc. And I will take you to the hot MCQs of credit management, which is often asked, right? So here you can find for newcomers, they can enroll to only one PDF course available there. This is top 100 banking MCQ RBI circular, just 1 year. But we have also added few special things like professional banking notes, AML KYC updated PSL norm, banking committee Basel 3, NPA resolution. Here all everything will come, like your SURFACE, IBC, RDDBFI Act, recovery of debts due to bank and financial institutions, ALM, call money, notice money, CP, CD, credit management, NF means non-fund based facility, bank guarantee and letter of credit, working capital and separate for bank guarantee. Economy budget and economic survey, we are expecting very less number of questions from this. And monthly banking may not be asked, but we have added. And top MCQs, MCQ and quiz, top 100 file 1, top 100 file 2 will consist credit management questions, and then BoM GBO 110, BoM GBO 200 digital banking questions. And for existing students, let me show you the second number MCQ is of credit management. Okay, so here you can find all the top listed questions for credit management, and this is a must for credit management aspirants. And apart from that, from content section, you can also go to the credit management folder. 22 files are there, you have to cover it before the exam. At least this much you need to cover if you are preparing for scale 3. For scale 2, only MCQs, few main concepts of credit management, and rest other banking study materials you need to cover. Okay, and those who don't have time, they can go to banking professional knowledge MCQ and notes course, and they can revise it in last few days. Okay, so now the time is to discuss about few important credit management questions. So let me take you to that. Yes, credit management. In credit management, we will be discussing, you know, all that we have discussed, and the regular class will be at 9:10, and my marathon class will be at 5:10. ठीक है, 10:05 पर मेरा क्लास होगा, और जो रेगुलर क्लास है वो 9:10 को होगा. वो इतना आप बाकी जो सेक्शन है अगर आपका कवर हो चुका है, डोंट वेस्ट योर टाइम इन क्लासेस. ओके, जो लास्ट में मैं रिवीजन कर रहा हूँ वो सब देखिए. तो आज मैं आपको लेके जाने वाला हूँ. I will be taking you securities in credit. This is one of the major concepts. Remember, unsecured loans, the basic difference between secured and unsecured loan is, secured loan is guaranteed by a mortgage or a collateral, whereas there is nothing, there is no collateral or mortgage in unsecured loans. But as per RBI norms, even if there is a collateral or mortgage in a unsecured loan or in a loan, and that collateral or security value is less than 10% of the original loan value, then that loan will also be treated as unsecured loan. So as per the actual definitions of banking, an unsecured loan is a loan where the security value is less than 10%. Okay, 0 or less than 10%, it will be treated as a unsecured loan, right? So loan and advances we have discussed. So I will take you to the one of the important concepts called, okay, we'll talk about lien. What is lien? Under this process, security is created on financial asset. The name of the liability holder is marked on the face of the financial instrument as lien. So remember, the basic difference between lien and pledge. Pledge can be of a financial product or a physical product, but you can mark lien only on financial products. What is financial product? Like FD receipts, STDR, security term deposit receipts, etc. You can mark lien over there only on securities, only on financial assets like bank balance. Somebody has 5 lakh in your account, in his savings account, and he is a defaulter in your other branch. So you can mark lien of that account, that entire savings bank balance, right? So that will be called lien. But pledge, you can only pledge things that are physical in nature. Pledge could also be, you can pledge security receipts, etc. But it could be both financial and physical. But lien will always be a security, only be of financial assets, right? And lien is of two types. These are confusing terms. I will discuss. 5 minutes we will discuss few concepts. Then I will bring you to the MCQs, right? And one stop group link, BoM GPO in Telegram. Link is in description. Do join. Whatever important information we have, we will post in that dedicated Telegram group. Either you join our official Telegram channel, that is Telegram/Knowledgist, or you join Telegram/BoM GPO. Okay. Yeah. So there are two types of lien. One is particular lien. Another is general lien. In particular lien, the person reserves the right to retain possession of the goods until the charge due in respect of the property are paid. In general lien, it is a right to retain the possession for the payment of the sum which is owed, and even if the payment is not connected to that loan, you can also take retention of that. So the lien which bankers enjoy is called bankers lien, or it is general lien. In particular lien, you can mark lien of the products that are linked to that contract. Like someone has taken a loan from you and he has deposited STDR to take that loan, fixed deposit receipts to that loan. So you can only mark lien to the receipts he has given for taking this loan. But in general lien, what you can do, even if he has not given you anything, but by chance you found that he is having a bank balance, or in another account he is having rupees 10,000 or rupees 1 lakh, and that is not connected to this loan, and you enjoy the privilege to mark lien of that product. So that is general lien, and banker's lien is general lien, and it is also called implied pledge. Implied pledge means it also enjoys the benefit of pledge. In pledge, if the loan is not refunded, you can sell that asset which is pledged to you to get that money. Remember, in gold loan, if customer doesn't come back to you, you can go and auction that gold and take the money back, take your money back, right? So it is a pledge. You can sell that security, you can sell that mortgage. But in lien, generally you cannot sell anything. But the banker's lien has the characteristics of pledge. So even if the thing is marked lien to you and customer doesn't come, what you have to do, you can sell that asset or you can redeem that asset to get your refund. Is it done? Is it right? Is it clear now? In lien, you can only take possession of the good and you cannot sell it. As long as customer doesn't come to you and repay his loan, you can only take possession of that asset, but you cannot sell it. But in pledge, when the agreed time is surpassed, it is NPA for long time, and you find you find that it is right time to sell that asset and to come over from the NPA, you can sell it. But in Lien, you cannot do it generally. But bankers can do it because it is an implied place. That's why it is called implied place. Clear? So these are concepts people wonder many a times, they don't understand. So in simple terms, I made you understand what are the basic difference between lien and pledge. And lien is defined under section 170 of Indian Contract Act, with and the particular lien is 170 and general lien is in 171. Okay, so we discussed about it. Then hypothecation is as per the SURFACE Act. Then comes the mortgage. Mortgage is of 6 types: equitable, English, simple, usufructuary, mortgage by deposit of title good, mortgage by conditional sale, and there is also one anomalous mortgage that we don't use generally. Okay, so these all are discussed there. And yes, this is the chart, you must be knowing it. I will take it to the full screen. Yes. What are the charges? Lien, pledge, hypothecation, mortgage. The act is in the left corner. You can find out the act. Indian Contract Act, Indian Contract Act, Indian Contract Act. Not Indian Contract Act. Hypothecation, it's a mistake. Hypothecation is in SURFACE Act, right? All the three are of all the above two are Indian Contract Act, hypothecation SURFACE Act 2002, and mortgage is Transfer of Properties Act 1882. So in lien, you can take possession of financial asset, pledge physical movable asset and financial asset, hypothecation physical movable and physical immovable asset. And remember, they ask you question in lien, who will have the possession? The lender will have the possession. Ownership will with the borrower. Pledge with the lender and ownership with the borrower. Hypothecation and mortgage, both possession and ownership is with the borrower. Right? You got it? This is what I meant for all of you. So now let's move to the MCQ part. Few MCQs I will take you today. Okay. So just a second, I will take you to the MCQs. Yes, MCQs are on your screen. So loans against the security of shares or debentures and PSU bonds, if held in physical form, should not exceed the limit of rupees dash 10 lakhs, 20 lakhs, 5 lakhs, or there is no such limit. Or there is no such limit. Yes, there is. Yes. Your answers, please. So yes, your answer, most of you are right. It is 10. Okay. Hypothecation is defined under which act? I just spoke about it. Hypothecation is defined under which act? Can anyone tell me? Those who are watching this video, why you people don't like this presentation? Video को like भी आप कर सकते हो. If you are really taking some knowledge and this class is beneficial, why don't you just like the video? I just spoke about it. अच्छा लगता है जब आप like करते हो. I come in a rapid fire manner so that you get some benefit out of our classes. Yes, SURFACE Act I just discussed. No. What should be the LEF limit for group of connected entities? I will not speak about LEF. I will not tell you about LEF. What is LEF? I think all of you know what is LEF if you have truly attended all the classes that we provided. I know, I assume that as of now you know all about LEF if you have judiciously attended my classes. Yes, I need everybody watching this video to like the video. Why you cannot like it? This motivates us to come forward with more and more videos. And even whatever we teach in our free classes, no institution, I can guarantee you, no institution in India can teach you in their paid versions, because they are just providing you the pure study material and redefining it, just changing the cover page. But ours is only platform. We have only work and only research on professional banking segment, and we have nothing else to do. We are not good for POs and clerks, we can admit that, but where we are doing well and we are the only platform to do so, it is 25. For single entities it is 20, and after RBI's approval it can go up to 25. Okay, and you will find it in some cases it is 15 and 40, but it is an old update. It is a large exposure framework. And what is that percentage of what percentage of what what percentage of what? Maximum 25% of your capital you can give as a loan, tier 1 capital as a loan to any group of connected entities. This is large exposure framework. You need to understand that. Yes, very good, Ravindra Nagre. Yeah, tier 1 capital of the bank, 25% of tier 1 capital of the bank you can give as a loan to one connected party, connected group, right? Or to one entity you can give maximum 20% to single entity as loan. That is the way you people are progressing. I'm very happy. Compared to unsecured lending, in the case of secured lending, other things remaining same, the probability of default would be higher, same, lower, and cannot say. It's an easy question, but you need to understand they ask questions like this. It's a damn easy question, but you have to, like in previous question you saw LEF, you saw group, and you have answered 25 without even reading the full sentence. But in these type of questions you have to read the full sentence, then only you can answer, right? And I again say here 30 plus questions is what I am expecting for scale 3. Maybe it can go up to 50 direct or indirect credit management questions. Then comes the question from, then comes the scale 2, 25 plus questions will be asked from credit management. And that is why I have mentioned the importance of credit management in BoM exam. PSL questions, again credit management. Questions related to credit guarantee fund, again credit management questions. So many questions will be asked from credit management. So you just cannot ignore about credit management. I tell you again and again. So I got your answers and responses. I'm very happy. It's lower. Security can be created on liability of the borrower, asset of the borrower, asset of the guarantor, both B and C. And these are the set of favorite questions asked, and these are the set of free questions which I can show in live YouTube classes. But for our premium students, enrolled students, and those who are going to join our PDF only session, which is there in our application and our web portal. Okay, if the link is not found, you can also ping us. We'll also update that PDF only link for last minute revision in the group. So there these premium contents will be available. Okay, security can be created on both B and C, asset of the borrower, asset of the guarantor. In the case of working capital finance, the primary security is inventory and receivables of the borrower, personal guarantee of the promoter, inventory and receivable of the business entity, none of these above. And if you have seen, you have covered my last set of 100 MCQs, you will find I have given you few good questions from accounting management, business accounting questions. Okay, so that is what I expect, that you have covered credit management, and that is more important for scale 3. Basic concepts from scale 2 is also expected. Okay, so I expect that from you to cover. And I'm also working on few more questions. If possible, I will give it before the last minute. So yes, I got your answers. It's A. Thank you. Most of you are answering in right direction. I hope that many of you will crack the exam. So in the case of working capital finance, what will be the collateral security? Options are same, just that was the primary security, collateral security. Primary difference between primary security and collateral security. Collateral security is the security that you give to take your loan or to secure the loan or to get the eligibility. Primary security, after taking the loan, you create the second asset from that loan, and it is called primary security. Okay. Collateral is to get the loan, to secure the loan. Primary security is the security or the asset created out of the loan you have taken. Like in a car loan, car is the primary security, and in a gold loan, gold is the collateral security, or in a loan against property, property is the collateral security. Am I clear? Yes, I am most of your and both B and C. Very good. In the case of lien, security is created on physical movable asset, physical immovable asset, financial or any physical asset. There are so many questions to discuss, but I will end with this question because you got the live class link in your group. Continue with that. I will see you in the other side of Knowledgist. That means in our portal for enrolled students. So I will start at 10:05. We will come with new concepts. So yes, this is lien. Security is created on. As I said in the very beginning, it is created on financial assets, right? So yes, again, before I quit, I must tell you, here you can find in this specific course only the PDF. Some of the PDFs are it is in the last minute course. Okay, so these are provided. No video classes are given here. No video class access is given. Video class is only available at last minute batch. There you can also get interview help, interview assistance, because I believe that most of you will crack the exam. Okay. So these are the notes, etc. given to you. So check it out. I will also post this link in our dedicated Telegram group, that is Telegram/GBO, or in our channel Knowledgist, Telegram/Knowledgist. So thank you again for joining us. If in case any one of you is new to the platform, please subscribe us. Thank you. And we expect that this batch, I hope that almost all the serious candidates are with us. So there is no reason why most of you will not crack it. And we have given our best to provide you last minute MCQs. I am also working on a few more sets. If possible, it will be also given. And thankfully today we got all our MCQs revised by senior banking officials, senior bankers, and all of them agreed that if questions has to come, then 80 to 90% questions should come directly from our material. So we hope, like last time, this time all of you will get maximum questions and familiar questions in your exam. Most of them will be from Knowledgist, so don't worry, don't panic, just stay